We started discussion on the final account of a sole trader last time, and we said that the main aim of this final account of financial statement 1 is to determine the profit or loss the business is making, and also to present or show the financial position of the business. By that we mean you show the asset, liabilities, and capital of the business. So for you to be able to do these things, you have to prepare 3 accounts and statements, right? And we stated those financial statements as 1, the trading account, the profit and loss, and the balance sheet. The trading profit and loss account is also known as the income statement, and the balance sheet is known as the statement of financial position. So we went on to look at how to prepare each of them, but we picked the trading account first. And in the trading account, we saw that this account is prepared to determine gross profit or gross loss. And gross profit or gross loss means the profit or loss you are making from buying and selling, because trading in itself means buying and selling. So if a business is into buying and selling of goods, then the profit they make from only the buying and selling is the gross profit or gross loss. So I think I took you back to GHS when you were calculating profit or losses using selling price minus cost price, right? And this time we indicated that we are not going to use selling price, we will use net sales. So in place of selling price, we have net sales, and in place of cost price, we have cost of sales. So those who were here would appreciate that we went through how to determine your net sales, how to determine your cost of sales. And after that, we saw the format, okay, the format to prepare the trading account. And I think there were no issues to the best of my knowledge. So Prof. Amanda, I think you may have to watch the video if I share with you so that you can also update yourself on the format of the trading account. But the brief I can tell you to make you feel comfortable is that in the trading account, we are only looking for the profit or loss the trader is making from buying and selling of goods. So for example, if you buy and sell shoes, then the profit you make from buying and selling of shoes is your gross profit or gross loss. It's a profit when your sales is more than your cost of sales, and it's a loss when your sale is lesser than your cost of sales. Okay. So I think we'll solve the assignment, or ladies and gentlemen, let's agree. Should we solve the assignment, or we should continue to the profit and loss account? Let me get answers as quick as possible so that Prof. Alexia, should we solve the assignment? Frank?
For me, I think we should continue to the profits and loss.
Okay. So the gentleman has given his verdict. The ladies, Alexia, Amanda, Aseye, and Dameki. Oh, Alexia, I can't hear you. You may have to type in the chat if possible. Amanda, let me hear your voice again, please.
Yes, please.
Okay, you would want us to solve. Okay, so you know what? I think I would agree to some extent with Frank, especially because you would have the benefit of the videos. And I think for those who have submitted their assignments so far, they did very well. except that they were confused about this particular thing. So let me just speak to some of the things and then we'll move on. So the only thing that skipped one of you was the sales returns. And please, sales returns simply means return inwards. Okay, so the two are the same, right? Likewise, when you see return outwards, it's the same as purchases returns. So I think that was the only thing. But I think I'll keep it for another time. We'll definitely solve the question. But for now, let's move on with the profit and loss account. So the second account we are looking at today is the profit and loss account. The profit and loss account. Okay. And I think one of you would read briefly this for us. The profit and loss account. Who is going to do the reading for Prof. Asay, would you read for us?
Profit and loss account. It is prepared to ascertain the net profit or net loss of a business. It focuses on the overall operations of the business. Thus, it includes all expenses and all income particular fiscal year.
Okay. Thank you very much. So the profit and loss account in principle is used to determine or calculate or ascertain a certain profit called net profit or loss or net loss. Okay. Now, why is it net profit or why is it net loss? Because it focuses on the overall performance of the business and it includes all expenses and all income which has occurred in the business under a particular fiscal year. So the profit and loss account, as it were, looks at all the operations of a business. By that I mean, for example, if a business is into trading, okay, there's also the possibility that apart from the trading, they also have other activities. Okay, so a specific example is maybe a car trader, somebody who deals in buying and selling of cars. Okay, so that's the trading activity. But this person could also engage in rental operations where he or she gives out some of the vehicles for rentals, maybe wedding ceremonies, maybe you are traveling, you need a car, you can go and rent. Apart from that, that business might also be involved in investment activities. Maybe they go to the bank and they deposit money for investment. Okay. So you can understand that apart from the main trading activity, which is buying and selling of cars, the business might also be doing other things, okay, which brings income to the business. So the profit and loss account will look at all the operations, i.e., your trading operations plus any other operation that brings in income. So if I'm to give another example, let's say your father or your parents are into selling clothing or they trade in clothes, they buy and sell clothes. Okay, so that will be their trading activity. So the profit they will make from their trading activity will be the gross profit. But if we are looking at their net profit, then their net profit will be how much they are getting from the buying and selling of clothes, plus any other income they are getting from, maybe apart from buying and selling of the clothes, maybe they also do should I say patching of clothes, or apart from patching of clothes, what else can you do in textiles? maybe offering consultancy services to people on clothing or fashion. Okay. So that is the profit and loss account. That will look at your total operations, and total operations here would include your main trading activity and any other activity. I hope it makes sense to my professors. So in the profit and loss account, what you do is you compare total income with total expenses. And the total income, first and foremost, begins with the profit you made from your trading. So as you see here, your gross profit or loss, the profit you are making from the buying and selling of the goods, and then you add any other income you are getting from elsewhere. Okay. Now, if I want to make it more understandable to you so that you appreciate, you see, your father might be working, okay, as a salary worker. So at the end of the month, the person takes salary. But you see, apart from that work, your father might be doing other works. So if you are looking at profit and loss account of your father, it will be his main work which gives him salary every month, plus all the petty jobs he does. Okay, and that will give him his total income. And then he will less any expenses he is incurring to arrive at the net profit or the net loss. Okay, please, any question? Any question? Okay, so the first thing I always want you to remember is that in your profit and loss account, you always start with the gross profit or gross loss, which is the profit or loss you made from your trading activity. Okay, so when you bring in that first, you go on to add other income or gains. Other income or gains refer to all the various incomes you are getting from other operations which are not necessarily your trading operations. And professors, as you see on the screens here, 1, 2, 3, 4. These are the 4 main other income sources you would be seeing under the sole proprietorship. So the first one is discount received. And I think we all know what discount received is. If your creditors allow you some discount, okay, you receive a discount from your creditors, okay, or the people you owe, they say, okay, instead of paying us 100,000, pay us 95,000. So the 5,000 difference becomes a discount you have received from your creditors. The second one is income on investment. So like the example I gave, if the business makes investment either in treasury bills or whatever, fixed deposit, or in the shares of a company, that income will be added to the gross profit. And then you see rent received. Yes, sometimes the business can rent out certain things to people, like the car business I spoke about. The car can be rented out to people and the business will receive rent. And then also commission received. The business might do something for people and then they pay commission. Okay. So look at, I'm straightly or taking you straight away to the format. So first of all, you bring your gross profit, okay, and then you add these other incomes to it to get your total income. And that's the first thing you have to do in your profit and loss account. After that, you less all the expenses you incur. And as for the expenses, you all agree that we have a lot of them. And expenses are the cost you incur for providing goods or services to your customers. Okay, so we have insurance, advertising, the rent paid. Okay, the rent paid becomes an expense. Discount allowed, which is the opposite of discount received. Bad debt, and Let me explain this bad debt. Bad debt means your debtors cannot settle because of one or two reasons. Okay. So for example, if Aseye owes me 10 cedis, then I will see Aseye as a debtor. Right? If Aseye cannot pay the 10 cedis, then I would have to write in my books that that debt is bad. Okay. So bad debt simply means a debt that cannot be collected or is irredeemable. You can't redeem it. And there are reasons why it becomes so. For example, unfortunately, if the customer dies or the debtor dies, you can't collect your money, right? Two, if the person goes mad or insane, you can't collect your debt. Three, if the debt is immaterial, imagine somebody owing you 1 peso. I don't think you'd be bothering about going to collect 1 peso. Okay, so it automatically becomes a bad debt. And then the next point is that if the person is declared bankrupt by a legal statute or by law, if the person is declared bankrupt legally, then if that person is owing you, you should begin to know that, oh, your debt is bad or sikanashi, like we locally put it. Then you have carriage outwards. Carriage outwards is the same as delivery expenses, okay? When you are delivering goods to your customers, the cost you incur is a carriage outwards expense. Then you have salaries, you have provision for depreciation. Now, depreciation simply means that your assets, your fixed asset, tangible assets are losing their value. So in your case, for example, your chop box, the chop box you took to Form 1, you can see that the paintings are, or your trunk, I should say, it is beginning to rust. Some of the body is beginning to, for lack of better word, I would say some parts are even broken. Okay. So that's depreciation. The asset is losing its value. So that's depreciation. And it's an expense to the business. Okay, so you list as many as possible all the expenses the business has, and that will give you your total expenses. You compare to the total income, and the difference will be a net profit or a net loss. Professors, are we good? Please ask me a question. Okay, if you are not going to ask me a question, I will ask you. As you have heard, can you briefly explain the profit and loss account to me in your own way? I think Amanda will do this. Prof. Amanda, based on what you have heard from me, how would you explain profit and loss account to your parent?
It's an account which has all the expenses and income that the business has acquired.
Okay. Okay, I appreciate that. That's nice. Prof. Aseye, how would you explain profit and loss account to your younger sibling?
Please, profit and loss account. It's profit and loss account. It's an account that is prepared to know the net profit and loss of the business or the income and expenses that the business has acquired over a period of time.
Okay. Thank you very much. Prof. Dameki, I want your version. How would you present this to your accounting teacher?
Okay, profit and loss account is used to determine the net profit or the net loss of a business. And in order to do that, you find a difference between your gains and the cost one has incurred in the business.
Okay. Okay, awesome. Prof. Frank, briefly summarize what you have heard under profit and loss account for us. Okay, I think Prof. Frank, maybe the phone is glitching. This morning I've learned a new word from my professors. It says my phone is Is it glitching? Yes, glitching. I'm appreciative. My professors are really teaching me too. That's a nice word. Okay, so Mr. Amwa, my summary is that when you see a profit and loss account, it is simple. First of all, it is used to determine or calculate net profit or net loss. This net profit or net loss simply means the loss or the profit we are making from our total operations as a business. And so to do that, you compare your total income with your total expenses. If the income is more than the expenses, you get a net profit. And the opposite is a net loss. Okay, great. So dear professors, I think we'll pick one example and see how to prepare this profit and loss account. Any question for me? Okay. So please, let's all rejoin the second session with the second session details. Okay, please, let's all do well to join so that we can have a fruitful discussion. Thank you very, very, very much.